For the sake of just efficiency, I am going to switch off my camera so that I can look at the screen where I'm going to be working in the software. But of course, you can hear my voice and you know that I am still here. So I'm just going to switch off the camera for this part of the series. Good. So what is all of this that we spoke about, that we dealt with where we were working? What does all of that then actually mean? How do we deal with that in Probe Audit Premium Plus? So I'm going to start off by saying what is new in the probe methodology in the template. So in the recordings, video 6 that you would have watched on the e-learning course, you would have seen some of the application. But what I want to especially focus on just in the first bit of our session is to see what is new in the methodology, or not necessarily in the methodology, but in the documentation. What is new so that we can see, or at least just be aware, because sometimes you'll go through training and you'll expect certain things to be in certain places, and then when you open up the template, suddenly it doesn't look like that anymore. There's a new question and you feel a little bit let's call it surprised, or just a little bit not sure what to do, how to react to that. So the things that are new in the new or latest template 2025, so this is the template that was released I think it was November last year, right? So that's the most up-to-date, the most current template that we are using. Firstly, covers some changes with regards to the Companies Act. So the Companies Act changed, or there were some elements that changed in the Companies Act at the end of 2024, December 2024, they become effective. There are still some elements that are not effective of those changes, but those ones that did become effective in December 2024, those ones we have worked into the template so that you also have the necessary guidance. Those examples, or the examples of what has been included, is questions with regards to financial assistance. Now, there were always questions about financial assistance, and they are still in there, but the questions have been amended to accommodate for the fact that the Section 45 requirements of doing your, what is that testing that you've got to do? The wording has left me. But anyway, the testing that you need to do for compliance to ensure that the company only lends money when the necessary approvals and resolutions have been in place. And of course, the company has done their solvency and liquidity testing there. The wording is coming back to me. All right. So all of those requirements that we are prompting you to test for the compliance with the solvency liquidity requirements when necessary. So what's changed? The Companies Act says that you no longer have to apply Section 45 when you are giving financial assistance to subsidiaries. Right. Thank you, Timay. Yes, financial assistance. So I was specifically thinking about the South African Companies Act that talks about the solvency and liquidity test. For some reason, that got stuck in my mind somewhere. So there you will still have the questions in 1050 that says, has the company given any assistance? Then you'll have the questions in 1051 where you have the group entities, and then of course the procedures will appear in the work programs. So it's really just been updated for the change, no longer requiring it for subsidiaries. Then the public companies have specific steps that are required to be dealt with at the AGM. Now, in our case, we file, I can't show that. Firstly, we don't have financial assistance in our engagement, so that's why I can't show it to you in our case with file that we have. So it doesn't show in our file because we don't have it. Secondly, our company is a private company, so I can tell you about the changes for the public company, but again, I can't show it to you in our engagement file. But if you have another audit where you are auditing a public company, so those are listed and unlisted public companies, there will be steps in the procedures to prompt you to make sure that the AGM requirements have been met. And then lastly, we also don't have a social and ethics committee, but there's a composition requirements for the social and ethics committee of how many people, who should be the chair, whatever. And those again are prompted in the product when you need to have a social and ethics committee. Again, our company's PR scores far too little. We don't require a social and ethics committee in our case study. Then just another point for you to be aware of, and we will definitely address this in the last session on the 27th of March, because it's not such a big thing, but even when I had to go and train it the first time, I really had to focus on this. So if you haven't come across it yet, don't worry about it. We will address it on the 27th of March. But essentially, the probe optimizer helps you to make the content, to remove the content from your engagement file that is not relevant to your engagement, and specifically then work programs and some of the planning stuff that's not relevant. Those are for sections that don't have balances, or sections, well, in the current or the prior. All right, so your work program is literally blank, but you can always add them back, so that's not the end of the world. So in the third session, we will also just demonstrate. I'll show you a few things there in terms of how to optimize, what happens, what do you see, what is the message, etc. If you've seen them already and you just ignored it or whatnot, that's also fine. But that has been brought in just to make the files slightly smaller. All right, then for information produced by the entity, that is, of course, a big theme in terms of regulatory reviews. And the standard, as a 500 paragraph 9, says that auditors must, when they want to use work produced or information produced by the entity, the auditee, they must ensure that that information is sufficiently accurate and complete and reliable for you to use as audit evidence or as representation of information. So we've just added there specific prompts then in 1050, and then also, of course, when you're going to do it in your field work, prompts in the work program. So I'll show that to you shortly as well. And then the last thing that's new is specifically additional prompts for service organizations. So again, in our case study, we said we're not going to use service organizations, but if your client uses service organizations for preparing information that ultimately goes into the financials, let's say, for example, they use an external service provider to process payroll, and that information then comes back to the business, and they basically just process the payroll through journal entries. They don't have that system, that all of that by themselves in their own business. Then we will, as auditors, have to consider to what degree we're going to rely on the service organization and apply some requirements there. Now, what's changed in the template or in the methodology is that we now also give you the option to say, yes, the client uses the service organization for elements that aren't linked to a line item in the financial statement. So you could previously say, yes, the client uses a service organization for operating expenses, which is, of course, including your employee costs then. But what's been added now is that you can do the same for disclosures. All right, so disclosure line items, I don't know, let's say related parties or something like that. You can now also indicate that, and then your work program will also prompt you for specific procedures with regards to the service organizations. So those are the I almost want to say the biggest, or the changes to the probe methodology. There weren't any big standards coming in that changed, so those were mostly the changes. Then maybe as a heads up, there is, this is really just as a side note, I was at the IRBA CFAS meeting earlier in the week, and again, there's just a lot of, I just want to say, build up for the standards that have changed, or the new standards that have been issued for fraud. ISA 240 has been revised, and ISA 570 going concern has been revised. They're not effective yet, right? So don't worry, nothing to worry about. But I want to just make you aware of those, because there will be significant changes coming in the audit templates that you are going to use when you do your December 27 audits. So that will be the audits that you're going to do from the start of 2028, so January, February, March, any of those audits with December year ends. And of course, then also, actually, now that I think about it, I always talk about the year end, but the technically correct way is to think about it, and that's the way the standard's written. It is applicable to financial periods that start on or after 15 December 2026. So if you have a client with a 6-month financial period or 9-month financial period, those could already then be throughout 2027. But for your clients with full year periods, those will then be your December year ends, will be your first ones with those new going concern and fraud standards. So just expect that, know that you need to just go and find out what those standards are, and definitely know that the template is going to have more what's news than just these few things that we have this year. All right. Good. So then let's go and look at the laws and regulations and specifically application in probe. So I spoke earlier about us having to find out or to confirm or to obtain an understanding of the laws and regulations applicable to this business of the client, and to go and find out which ones are directly affecting the financial statements, materially directly affecting the financial statements, and those are the ones that we're going to focus on now. Of course, still the others with a possible material effect of the financial statements will still require an assessment of whether there are any instances of non-compliance. So I'm not going to address that too much, but what I want to just highlight to you today is for those laws and regulations with a direct material effect on the financial statements, how are they treated in probe? What must we do to get the necessary audit steps? So in 1121, which is the document for considering laws and regulations, you'll select those laws and you'll select them as having a direct impact. And then we'll have to go to the audit plan 1220, where we will have to go and indicate that there are laws linked to the financial statement account. So your line items, if I can put it that way. So let's say I'm just going to pick property, plant and equipment because that's the top section. So I don't have to scroll up and down too much. So there we are going to say, yes, there is a law that is applicable to this line item. Let's switch on procedures, and we have to physically go and add those procedures ourselves. Okay. Why is that the case? Well, in the past, we used to have all of those laws and regulations switched on automatically because we just had all of the procedures switched on for all assertions. But now we can't actually link the laws to assertions anymore, because if you don't have a risk for that assertion, the steps are not going to appear in your work program. Right, so that's the general one. You're going to add your procedures to the work program, ensure they're there. That's the first thing. Then the second thing is, as with everything, it almost feels like a tax act. There are except-fors. There are exceptions. And so the first exception is, in a South African environment, the VAT Act. If you indicate in Trend 50 that the client is registered for VAT, the procedures and everything for testing compliance, because that's what we have to do, direct material effect on the financials, we have to test compliance, we have to have audit procedures. So testing the procedures for the VAT compliance will be in the work programs with material classes of transactions and account balances and disclosures. So let's say like revenue or things like that with material balances, as well as for those classes of transactions, account balances and disclosures that have relevant assertions. So Scottabodies if you want. Okay, so in any of those cases, whenever basically we have a work program activated for an assertion, whether it's a risk or a selected assertion, there will be procedures for compliance with the VAT Act for those ones. Okay, automatically. So let's say we've got sales, there is a risk for, I don't know, completeness of sales or whatever the case may be. We will, because that work program is activated, you will already have the relevant VAT procedures included in there. If you need more, then you'll probably, I don't know, let's say you assume the client is going to have the VAT payable incorrectly done or something like that, then you'll probably raise a risk for that, and that will then obviously also lead to procedures. The next one that's also relevant for you to note the exception is the Companies Act, and again, the South African Companies Act. So there, the following three rules of thumb apply. Firstly, if there is a specific transaction requirement, those procedures for testing compliance will again be included for all those work programs with material classes of transactions, account balances or disclosures. And material, just as a reminder, is literally more than performance materiality or specific materiality. Then when it is the requirements with regards to presentation and disclosure, like my example earlier about the director's remuneration, or the fact that there needs to be a balance sheet, for example, or a statement of cash flow, those steps will all be included in 18.10, which is the financial statement preparation. And your financial statement preparation work program is always completed. So it's one of those general work programs. It will always be there. You're always going to complete it. And then if there is laws and regulations or, well, elements of the Companies Act that is relevant, but it doesn't link to a specific transaction, it doesn't link to presentation and disclosure, those will be included in the work program 20.10, which is the laws and regulations work program. Again, part of our general work programs and must then always be completed. All right, so that's the slide. It is included in the notes that I put on the Success Community for you to download. So that will be available. What I want us to go and have a look at now is to actually see how does this play out when I work in 1121. Good. So the caseware file that I'm working on today is the one that I've basically used a new version of the template. So I'm obviously using the latest template because I want to show you the changes. But it has exactly the same case study information as the file that you are using. So your case study file that you are using will have the same application for 1121. That did not change in the last year. That's changed in 3 or 4 years ago already, but we find that people still don't know how to use that, and that's why I wanted to highlight it today. All right, so we're going to go 1121 under planning and risk assessment procedures. If I open 1121, then no, it just wants to, oh, good, all updated. Just make it the right size. So here we have laws and regulations, and you'll see that the laws and regulations have already been selected. So here we've got, for example, Basic Conditions of Employment Act, we've got the Companies Act selected, we've got income tax, etc. Now, this is, of course, not what the page looks like when you join it initially. When you start on a blank one, it has the list of the acts, and you have to go and select them. So what that looks like is then for each of those items, you have the drop-down menu, and I know it's absolutely minute. Unfortunately, I can't zoom in, but I'll tell you what those 4 options are. You might already be familiar. Firstly, not relevant. Like, for example, I'm now next to the Auditing Professions Act, so that's obviously not relevant to wrap up manufacturing. The second option is it's relevant, but it has an immaterial effect on the financial statements. That's almost like saying, if the driver gets a fine for driving too quickly with the truck, then that's not really going to have a material effect on the financial statements. Whereas if I can get a fine for non-compliance, that will be a possible material effect on the financial statements. I used the example of skills development levy earlier. I think here we used, I can't remember now what the example was. In fact, let me scroll down and see which one we chose. There we go. We said Occupational Health and Safety Act has a possible material effect on the financial statements, because if we're not complying with Health and Safety Act legislation, we can actually get a fine or get sued for material amounts that's going to be on the financial statements, right? And then the last option, of course, is the direct material effect on the financial statements, and that's the one where we had the Income Tax Act. I think they're all, Value Added Tax Act or VAT Act there, and the Income Tax Act is listed there, as well as the Companies Act is also listed as direct material effect. All right, so those ones are selected. Then, first step is to obtain an understanding of how the entity is complying, and that's, of course, this first table that we are looking at. I don't need any evidence at that point. But then for those ones that could have a possible material effect if they are non-compliant, in this case, there's our Occupational Health and Safety Act, is listed there, and we will then need to conclude on whether any non-compliance has been identified. So the step to identify instances of non-compliance, inspect correspondence with the relevant licensing or regulatory authorities, and inquire of management as to whether the entity is compliant. So we'll check our return, regulatory, licensing, whatever the case may be. In some cases, this may be a compliance certificate. Like, for example, it might be that you have, let's say, I'm thinking now, the only thing I can think of is the estate agents, for example, where they'll have a compliance certificate from their regulator to ensure or to confirm that they have in fact complied with the requirements they've submitted, their audited financials, etc., etc., etc. Okay, so that could be a compliance certificate, but in other cases we might not get something from the regulator. It might rather be that we are proving we have submitted, let's say, the UIF, or we have submitted the EMP 201 that indicates the UIF, the skills development levy, etc. So only conclusion necessary then there is, have we identified non-compliance? And if not, we say no, and it will sign us off. If we have identified non-compliance, then we'll have to go further and document what could be the effect on the financial statements, because we said if they're not complying, there is a possible material impact on the financial statements. So go and test that, possibly raise a risk, etc. Okay, so that's the non-compliance. However, for those with a direct material effect, this is now the part where we need to, just want to say, focus there, no? Where we are saying these laws and regulations may actually have a direct effect on the financial statements, on the determination of material amounts, and therefore we need to go and get audit procedures. And that's there where we will go to 1220 to go and ensure the work programs has the necessary steps. And you'll see at the bottom here also you've got that instruction. We like to refer to them, or it's called an instruction. It's a red underlined hyperlink also that tells you you should now go and do something to ensure that you are compliant. All right, what is it that we need to do? We need to go and make sure that we have the necessary work procedures in work programs to test compliance with the Companies Act and the Income Tax Act and the VAT Act. These are the only three that I'm showing you. Okay. Now, the two that I've said that's already in there, that's the Companies Act and the VAT Act. So for Income Tax Act, we'll have to go and ensure that we have the necessary steps. So I'll click on 1220 and I'm going to go to the audit plan and strategy and make sure that my work program has the necessary steps. So in looking at the audit plan and strategy, I won't actually see the general work program section. So I spoke about the laws and regulations work program. I spoke about the financial statements preparation work program. We'll look at those just now, but I won't actually see them here in the audit plan and strategy. They are always switched on in any case. But for any of the other ones, I can't remember now if my taxation is switched on. There we go, taxation is switched on. Let's say I wanted to go and check that the Income Tax Act is actually compliant. I could have gone there and done the same thing. My assumption is that the Income Tax Act might already actually be on. But now remember, we didn't identify anything. So until we've actually go and identify a risk, there won't necessarily be anything in there. Okay, but let's go and use an example. I'm going to use property, plant and equipment for some other legislation around whatever the case might be, and see how that's going to be switched on. So we know property, plant and equipment won't have anything around the VAT Act. When we do actually add new items, it's possibly going to check that we've treated VAT correctly. So that shouldn't be a problem. But I mean, we're not going to have Companies Act or things like that necessarily. But now I've got another law, whatever the case may be, and I've said that needs to be tested for compliance. And what we're going to test here, or how we're going to switch on those procedures, will be on the left-hand side under audit considerations. We have this line that says laws and regulations may actually have a direct effect on the determination of these amounts. Yes, that is applicable to property, plant and equipment. It's okay. And then it says review and amend the work program to ensure that you're going to get enough audit evidence. Now, what's happened on the right-hand side is no longer do I just have required procedures as a section, which I would have had because I've recorded a risk. Okay, I have recorded an inherent risk. That's why I had required procedures. But now I have another section called required procedures, laws and regulations. So I can either click on the red button here to go and review the work program, or I can actually just follow the hyperlink to the work program itself, 30510. I realize now that I actually did not open that work program, so just give us a second for the script to run. So that it can just open 30510. That's the work program for property, plant and equipment, of course. Here we go. Just want to increase the zoom slightly so it's just a little bit bigger. Okay, just wants us to update or refresh. So we will refresh. All right. There we go. Right, so this is the work program for property, plant and equipment. And you'll see on the left-hand side on your document map, you have the account balance, you've got required procedures, and in there we have a number of sections or procedures. We've got impairment, and I assume that's because we would have selected impairment under the planning for the sections. We've got estimates, journal entries, and then we also have this section for laws and regulations under required procedures. Now, have a look at this. It's not like the magic that it's thought up your procedures for the law or regulation that you're wanting to test, because there could be any or many of these accounts or legislation. So we can't predict or write them for you. We don't know what they are. So what you will do is you will go and determine or see, you'll be prompted to say, in 1220, you identified that laws and regulations from 1121 is effect or could have a direct effect on the determination of the amounts or the disclosure for this section, being PPE. Add, so you must now please go and add procedures to obtain sufficient appropriate audit evidence about the compliance with that laws and regulations, taking into account the audit procedures that you've already included in this work program. So you would have seen what is already included, and now we're going to add extra procedures. How do we add extra procedures? You right click right there. You can actually right click anywhere, but it's best to right click, I almost want to say just above where you want to add procedures. If I right click, it said insert row. So I'm going to insert a row there, or a procedure. And now the software will prompt me then to say, right, what type of procedure do you want to add? Well, we don't need a heading. I've already got a heading, laws and regulations, but I may want a procedure, number 13, for example. And because I've got number 13, but I want to test 13A, B, and C, I'm going to start with 13 and a sub-procedure so that I have 13A. So I can actually click both of them already, and then I'll just add more sub-procedures later on. At the bottom here, we can see what it's going to look like. So I'll click OK, and then it runs the script. It looks kind of interesting. And then I have step 13, step A. So here I will maybe say something like, to ensure compliance with law XYZ, and then I'll say, step 1, I don't know, recalculate or confirm or inspect or whatever your procedure is going to be. Right. So that is how you will then add procedures. Of course, if you want to, you can always hide step 12, which currently basically is just a prompt or a reminder for you. So that's perfectly fine. Right click and you can say ignore this procedure. That will then hide that procedure for you so that you don't see that, which might look funny. And then if I'm done completing or editing my procedure, I can just unswitch or untick or switch off the enable editing to say, okay, I've written the whole procedure. It doesn't have to be in gray or in an input cell anymore. That's what I want it to be there. Okay. Remember that before you remove the editing enable, that you just select the relevant assertion, for example. Yeah, I'm just going to say ABC, right? And then if I again deselect enable editing, I will see my procedure, which currently just reads ABC, and I'll have my assertion so that when I then go and need to conclude on the assertion or anything like that, it's there. You don't have to have an assertion. In fact, you'll see the compliance with legislation procedures in the other work programs for Companies Act and VAT and those generic ones. They don't actually have assertions linked because we don't want them to hide when you haven't recorded those assertions as risks. Okay, so you don't have to have an assertion, but if you want to have an assertion, remember to just link that up before you continue. All right, that's laws and regulations that have a direct effect where we need to actually ensure that the work programs have the necessary procedures, and therefore we're going to have the right work audit evidence rather available. Good. Then in terms of the methodology, just as a reminder, you may or may not remember the way that we use the risk matrix or the desired audit risk and the risk of material misstatement, and how to basically, what is the word, just operate between the two. So I'm just quickly going to take a moment to show you that, and then I'm going to show you a few other things also in the methodology. You know what, before we go there, I actually wanted to show you the work program for the generic work programs. Let me just backtrack. So the general work programs are the first ones that are showing before you get to the sections, the property, plant and equipment and all of those work programs. So here we've got 20.10 being laws and regulations. And then just above that, we've got 18.10. While the document is opening up, you can see 18.10 financial statement preparation work program. So let's just quickly open up 20.10. And then you can see, now, those of you that have maybe have had some experience on Probe for a number of years, you might still remember 20.10 was in the years gone by. That was actually the property, plant and equipment section, right? So don't get confused now. 20.10 is now laws and regulations. All right, so laws and regulations work program. This is for when we don't have specific transactions, but we want to test compliance with Companies Act. Those will then be in the laws and regulations work program. So here we've got procedures, just general ones, and then we are actually listing the Companies Act ones, where we are testing about shareholders meetings and resolutions, committee meetings, and here also you'll get those things about the social and ethics committees, etc. if you had those. Okay, so you can see then definitely work procedures for us to be done here. So don't ignore, don't forget about these work programs. The same also with your financial statement work program, etc. So all of these actually have to be completed in all of your sections. So you've got accounting records, you've got opening balances and comparatives, financial statement preparation, which then talks about what must be in there, testing both IFRS or IFRS 4SME, whatever your financial reporting framework is, as well as, of course, the procedures for the disclosure from the Companies Act that we mentioned now. If you have general IT controls, that's where your controls work program would be for the steps, the procedures for testing IT controls. And then I spoke about laws and regulations. And then, of course, the bottom two, 2510 and 2016 is for groups, if you have those. Right, so don't just disregard the general work programs. They actually are important. All right, back to the methodology. So in the Probe methodology, you may or may not remember that we often refer to that as like a GPS or a guidance or a directions tool to help us to determine where we want to get. Now, whether you use Waze or Google Maps or whatever it is that you are using, you can't get directions to where you want to be if you don't first know where you want to go to. And that's why we've got, in the Probe methodology, we've got desired audit risk. One of my colleagues refers to this as DAR. Now, in Afrikaans, if we talk about DAR, we say there. That's where I want to go. I want to go there. Of course, that's with a double A, but DAR, desired audit risk, has one A. So the desired audit risk is determined right at the start of the audit in the planning documents when we start to say, what is the desired audit risk that I would be happy with to sign off the audit opinion to say I've reached that low enough, acceptably low level of audit risk, is the wording from the standards, to sign off this audit report. In the Probe methodology, we determine that by considering the initial or the planning risk of going concern being appropriate, and by looking at whether, so not just any users, but whether the external users are indicating to us that they have a, that they specifically going to rely on our opinion. In other words, I almost want to say that we carry more risk by the fact that they want to use or rely on our opinion. Right, so those two things are then indicating what our desired audit risk will be, and the three levels there is low, which is then the highest level of desired audit risk we are happy to take. So if going concern is low and we don't have any users specifically relying on our methodology, we'll take the highest risk that we can in this scenario. Otherwise, we'll go one step low to very low or minimum and do as much as we can to get their DAR to the desired audit risk. Next up then, we need to determine where are we now. So I know I want to get to wherever my destination is, but we also need to determine what our risk of material misstatement is, and that is where we are starting then. So where are we starting? We are starting at the risk of material misstatement. And as we are progressing through this planning and risk assessment, you would have seen we've started with our risk assessment procedures. We haven't done the specific materiality. We haven't done the assertion level risk yet, but we have already determined the inherent risk at financial statement level. We have determined the fraud risk at financial statement or overall level, and we've also considered the control risk or internal control at financial statement level. So once we then done through session 3 also considered the assertion level risks, we would be able to determine, or we will get to the point where we know what our risk of material misstatement is. So this whole arrow or triangle that points to the top, that is indicating how we are basically getting to the risk of material misstatement, telling us where are we now, what is our starting point, and then from our starting point right at the top, we obviously want to go to our desired audit risk. That is where we want to end up with our traveling. And as you may remember from audit level 1, we then basically have a triangle that builds down to the bottom to say, how will we get to desired audit risk? And that will be through our audit responses. Okay, so what journey are we going to take? What will be the route that we're going to take to get there? That it needs to be an efficient route. So we can't just audit and audit and audit until the end of days, but we need to take a journey. We're going to go there. We're going to get directions to determine how to get to our desired audit risk. And specifically, or important here, we have a few traffic rules also. You might remember those. The traffic rules that we have that's relevant is all significant risks must have a significant risk response, so a very specific audit procedure to respond to those. If I want to rely on controls operating effectively, I must test them for operating effectiveness, and there will always be required procedures whenever I have an assertion. Right, and then if those don't yet get me to where I want to be, so if it doesn't sufficiently address the audit risk, then I can always perform extended procedures, which will then include the sampling to get me to my destination, my desired audit risk. So just to show you that visually, again, this is our triangle then that goes to the bottom, showing those same elements that hopefully then gets us to the desired audit risk. All right, that is I don't even know if that was 2 minutes, quick run through of the methodology to remind you how we get to that, just in case you haven't heard that recently or you've forgotten what that was. Now I want us to go and have a look at some of the documents in the probe methodology. Right, so I'm going to start by looking at the, it's gone 11:20. I want us to just quickly start firstly in 10:20 to show you where that desired audit risk is determined. So right at the top of our file, engagement working papers, we are starting at the engagement evaluation. So engagement evaluation, literally, this is where we decide whether we're taking on the client or not. And in the conclusion, we are determining the desired audit risk. Desired audit risk for this engagement is set as, in our case, low. Right. Remember the slide said low, very low, or minimum, and that will change as we actually change the responses to these last two questions. Okay, so there we get to high. Good, so that's the desired audit risk. Next up then, I want us to go to 10:50, just to show you, you'll remember that we spoke about the information prepared by the entity, the fact that when we want to rely on IPE, information prepared by the client, we need to test that the completeness and the accuracy, and that it is sufficiently reliable. So gathering information, I always think about this one as switching on light switches across the file. I almost want to say at financial statement level, but technically speaking, that's probably not right. And one of the first questions it asks us is, do we plan to use information produced by the entity, including system-generated source information? Okay, a reminder again, I'm using version 2025.20, so your case study file will not show these questions. They are new to them, okay? But when you go and do planning on a file tomorrow, next week, this afternoon, whenever, this will be a new question if you are using version 2025.20.13. So if I'm saying yes, well, I'm almost expecting every single audit to say yes, because it's almost impossible to audit a client's financial statements without referring to information that they prepared. I almost can't imagine how you're going to audit it not referring to that. So first of all, we say yes. And then when I say that's the case, then it says, okay, at which stage are you going to refer to IPE? Are you going to use that information for planning purposes? And I'll switch it on just now. Or are you going to use it for substantive procedures? Substantive procedures or test of controls in the field work, that will then switch on steps or procedures or guidance or reminders in the work programs. If I switch it on and say I am going to rely on information prepared by the entity in the planning section, I'm going to have a new question that appears just below here. I've got a new question, question 6, that says, did we test the accuracy and completeness of this IPE, including the system-generated information that we're going to use in planning? Of course, the answer must be yes, and then I'll document, or I will include a working paper reference to where that information was tested. All right, so this is really just to help us not to forget to document that we are relying on the information and how we have tested it for compliance with ISO 500 paragraph 9, testing the completeness and accuracy and the reliability of information prepared by the client. All right, next up then, we're going to go into the risk assessment process. I'm going to close this section for pre-engagement so that we have the planning and risk assessment right at the top. So here we are starting in 1120, the inherent risk assessment document. You'll see just below that we have laws and regulations, which we already looked at. But for now, though, we're going to start with 1120, the inherent risk assessment. Now, thinking back to some of the topics that we discussed earlier on when we were doing our polls, you will see that many of the topics that we have here on the right-hand side in the document map, I just want to, these topics are quite lengthy words, so I'm going to just move the document map for us. You'll see here, understanding of the entity and the environment. We have structure and ownership and governance, business model, industry, regulatory and external factors, measures to assess financial performance or key performance indicators, and the financial reporting framework and accounting policies. Those are, of course, the scrolls that we used in our environment in our picture. So in our slide, we had the house in the middle, and then we had those red scrolls around us in the environment. These are those 5 elements, right? So the document really prompts us per topic with some questions to consider. And you can take your time. The information in here is exactly the same as in your case study file. So you can go and have a look at how we documented it as suggestions, what to consider, etc. I had a question recently to say, but when I look at what other people are showing or what's in our planning file or whatever the case is, I see all of these green things also coming up. I want to remind you, the green, the considerations are mostly only visible if you have chosen the extend template. Now, that is set also in 1020. I'll show you just now where that question is. Personally, I believe it is the best practice to always rather use the extend profile. The alternative to that is the core profile. Core profile will sometimes have less questions, sometimes not have the considerations. But the core profile is primarily written to say, we will help you or prompt you to document the minimum requirements from the required procedures from the standard, whereas the extend profile or the extend option will give you additional guidance, maybe bring in some of the application material, etc. So I honestly don't believe that any of us know the standards inside out. And will remember every single application paragraph. If you just think about ISO 315, I mean, that thing has hundreds of paragraphs and even more application paragraphs. There's even 6 appendices. Is it now 6 or 5? But I mean, it's just a lot of information. So I definitely believe it is best to have the extend profile switched on so that you can have your considerations, and also, of course, where there are additional questions, then you can have them. There's really not that many extra questions that you can say, oh, no, it's too much documentation. It's really not the case. Considerations, you can choose to document something about each and every one of them, but you don't have to. It's definitely not part of the probe, I just want to say methodology, policies, or something to document around everyone. I do know some firms who say, well, if there are 5 bullets, I want you to document 5 things, even just to say there is no, there is nothing, there is whatever. Okay, but that's not a requirement by the methodology. All right, so those are your 5 items. Then in terms of identified risks, in this case, I've not recorded an identified risk. And then, of course, from there, you'll see if you don't have any risks, then any risks recorded rather, then your default will be low inherent risk at financial statement level. It can't be higher because you haven't recorded any risks. So if we want to have it higher, I'm just quickly going to show you how to go through that again. So you'll say add new risk to go and record it, and your risk dialog will open up. This is inherent risk at financial statement level. You can either select where the source of the information came from, but also it's been programmed to say wherever you come from, whether you found this risk in 1020, whether you found this risk right here now in 1120, you can double click, and wherever you were just before this, that will then be recorded as your source document. You can then record your risk. Now, I'm just going to say risk here because I just want us to see what happens when I do record a risk. You will document your considerations here, and even guidance in the input cell to say document the effect that this risk could have on the business, as well as the considerations that you use to assess this risk. Sorry, I'm saying on the business, on the financial statements, of course. At financial statement level, you've got some guidance there in the light bulb that also pops up. So you will document your assessment. So I'm just going to say assessment, and then you will conclude low, medium, or high. If you say low, it's as good as not having the risk, almost in the sense that your conclusion at the end is going to be the same. But I want us to now show a medium so that I can show you what happens when there is risk recorded. Firstly, at financial statement level, we have overall responses. So for every financial statement level risk that you're recording, you'll have an overall response, which you are going to record. You're going to see now, or you may remember also from the recording, that in the fraud case where we've got management override of controls, there are required or prescribed responses. But yeah, this is just an inherent risk. We can decide what is the best one. How are we going to audit this? So maybe we're just going to say, well, we're going to just maybe have better or more direct supervision and review of the work, and giving better direction because of this matter. Or maybe we're going to use an expert to review the tax calc, or whatever the issue may be. Okay. Once we've documented that, we click submit. So now I want us to see what happens. The script is just still running. The risk is going to be recorded, and then we're going to see what will happen to our document. There we go. So where before I didn't have any risks, I've now got my risk. Don't worry about the wording so much. It's been recorded, and the risk is medium. Now, what has changed is, firstly, just scroll down a little bit. Just want to give it a moment to run that script. The first thing that we can see in the conclusion is that we already have that question about the risk assessment from the client to say, did any of the risks that we identified indicate risks that we would have expected management to identify, but they didn't? So that one's always there, only now it's more relevant. So let's say, no, we didn't expect management to record it, or management also identified it, so that's fine. But the next question then is, you have now recorded a risk. So this wasn't here before. You have now recorded a risk. Do any of the risks that you recorded affect the risk at assertion level? In other words, basically saying, should you have now recorded a risk at financial statement, but should you also go and record a risk at assertion level? That's basically what it's telling you. Okay. So just consider that. Is it good enough that we're responding overall, or should I also be going and recording a risk for a specific account or section? So I'm just going to say no in this case. And then there we have the medium response, or medium risk assessment, sorry, the overall risk assessment. And this here will always take the highest of the risks that you've recorded individually. So if I have 2 or 3 risks recorded here at the top, and one of them is medium and one of them is high and the other one's maybe low, then my overall risk assessment will be high, because the highest of the ones that I've recorded is high. Okay. In this case, the highest of the ones I've recorded is medium. So that's the overall risk. There's the overall responses, basically combining all of those responses together. And then I have this also extra question to say, do you want to increase the extent of work to be performed on all the other sections in your file? Okay, that's the plain English if you want. It says to the extent on all relevant and selected assertions as part of your overall response to addressing this risk. So your inherent risk at financial statement level that you said is medium, is it good enough just to change the nature, timing, extent of direction, supervision and review? Or do you also want to go and basically say, I'm going to do more work to address all of the other assertions. If I've got completeness of revenue, cutoff of this, accuracy of that, valuation of that, blah, 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 I'm going to test more, I'm going to get more evidence, then you'll say yes. So essentially, you'll increase the risk of material misstatement for those items. If I say no, this response is sufficient, I don't need to increase the extent of work at assertion level for this risk at inherent risk, for this risk at financial statement level. All right. Good, so that's 1120. For 1150, I want this, not 1150, apologies, 1125, the fraud risk document. I want us to just have a look there and just realize that the 3 legs to the fraud triangle are actually included in here. So there's risk assessment procedures, and the questions, the prompts that you get are literally grouped by those 3 legs of our triangle. Incentives with some prompts, and here you'll often find, I've often found it also, is that the questions are written, let's say more or less, not technically speaking, but they're written to identify fraud, and often because we're looking at financial statement level, they're written with the intention of identifying fraud at financial statement level. But the type of questions and some of the examples even are often also assertion level. So if you have an assertion level risk, you've got your record button. So whether you are recording a fraud risk at financial statement level through using that second option in the dropdown, or whether you're recording a risk at assertion level through using the additional list and recording that for a specific section, either way, you can record the fraud risks from here. Okay, you've got lots of lovely prompts. So we've got incentive, we've got opportunity, we've got rationalization with all of the examples of questions and prompts below that. Then we've got identified risks, and here again we've just got the identified risk for management override of control. And I think the most important thing to me here is that the standard is very, very clear, and it says it doesn't matter what your risk, your assessed risk of material misstatement is, you will always regard this as a significant risk because it's a fraud risk. Fraud risk is always a significant risk. And because we have those 3 parts to the risk, we have those 3 responses. So let's see what's already recorded in here. And remember, these are documented here as overall response because it's already been worked into the methodology. So you don't have to go and record procedures in a work program for this. It's already in there. So first of all, we're going to gain an understanding of the controls around journal entries, including those non-standard journal entries that are used to record non-recurring unusual transactions or adjustments. That is done in 1150, where we get an understanding of the journal entries. Test the appropriateness of journal entries, do the actual detailed work that you are prompted for in 1610, which is the accounting records work program in the general work program section. And then based on your fraud risk assessment, consider testing extra or additional journals. And that's there where you take your professional judgment into account, also considering the insignificant unusual year-end procedures. All right, so that's the response with regards to journal entries. Estimates is already worked into the methodology. What is the last one? Is transactions outside the normal course of business. You're prompted for that and to go and record the responses for those. Okay, so those will already be in the methodology. If you, what is the word that I wanted to say now? If you want to include the ROM here, so remember I just want to say you don't have to have a ROM here, because if you do go and assess this as a low risk, so remember the standard said, no matter what your assessment is of the risk of material misstatement, you have to have these responses, and it is a significant risk. So if you assess this risk as low, your responses are going to fall away, and you don't want them. You have to have them. If you assess this as high, you might be in a slightly, I just want to say difficult position that says, but why did you take on the client if your risk assessment is high? So I think the easy way is to say, look, if you feel uncomfortable choosing either of them, you don't have to choose either of them. You will still have documented the response. You will still have the responses in your engagement file. All right, so that then in terms of the fraud risk assessment, the script is just still running after I clicked submit risk, so that's fine. Just want to wait for it so I can just scroll down and show you the same, what's the word, the same type of questions that we had just now in inherent risk, where we've recorded the risk. Could goodness, let's just, okay, there we go. We've recorded the risk. We then have that same question to say, do any of these risks recorded affect an assertion level, a specific assertion level? Then you could go and record them. And then there is our fraud risk at financial statement level is then an overall. And because we haven't selected one, the overall will just be low. And there we also don't have the question of whether you want to extend or expand the procedures on all sections, because we didn't actually raise that fraud risk overall. It is still only low. All right. The last thing I want to show you at financial statement level risk assessment is then 1130, evaluation of the system of internal control. And there, remember that we have those three elements. We have the control environment, and again, similar to the fraud risk document, control environment is a section with questions and prompts for you. We also have the management's risk assessment process, and we have monitoring. So those are the three direct elements of internal control, if you want like that. Control environment, there we have a description of the process. So what is it that the client does, and explain how you verified your understanding. So it doesn't have to be a walkthrough as such, but how did you make sure that you are correctly understanding what the client does? With risk assessment, the same process, and then with monitoring, also the same thing. The important part is that for each of these elements in the conclusion, and I'm just picking the risk assessment one, you have a question to evaluate whether this process is appropriate for this client. So it's not saying assess whether there's high or low risk or anything. It's saying, considering this client scenario, this client's requirements, whatever the case may be, consider if the risk assessment process that this client has in place is appropriate. So maybe to use my example again of saying the client doesn't have a risk register, doesn't have an internal audit department, etc., but they are a small owner-managed business. It's not required for them. I can still conclude and say it is appropriate for them. All right. I can also identify risks. So I have the option to identify risks, and that will obviously also increase my overall risk assessment. But in the case here for controls, we didn't record any control risks at financial statement level, and therefore, again, I have a low risk for control risk in 1130 at financial statement level. Right, that brings us to the end of what I wanted to show you, and then also to the end of today's session. So I thank you for your participation, for your attendance, and the only thing I want to still ask you is to please follow the link that I'm sharing in the chat now, and please go and complete the post-course evaluation for us. You would have noticed we are asking for your feedback after every session so that we can see what you find helpful, and how we can improve these sessions for you. So as a reminder then, just the next session is then on 27 March. You've got about 3 weeks. There are 4 videos for you to watch. Maybe catch up on this week's ones if you haven't yet. Watch those videos. You can even get the certificate on the e-learning. And then I will see you again and speak to you again on audit level 2, about planning the audit on the 27th of March, again at 9 o'clock. So thank you for everyone for your participation, for your attendance, for submitting your responses to the polls, and I'm already looking forward to our next session on the 27th of March.